Recording in progress.
Hey, good morning, everyone. Good afternoon, good evening, depending on where you are watching this video from. This is just a quick recap of what we've done, in the past. I just want you guys to take a look at what I'm explaining this morning, and this is basically to help your understanding. If you remember in one of our classes, we talked about the reversal pattern, right? We'll talk about the MTI King's Crown, okay? And in the MTI King's Crown, we did mention that there is a bullish King Crown and there is a bearish King Crown, right? Um, um, there are five-step process to forming this. And I want you to look at this chart so that when you take the trade, by virtue of knowledge and by, material that are available both online and, lecture that people have taken in the past, we know of the head and shoulder pattern, right? So the head and shoulder pattern, it has a neckline where you have to wait for the market to break that neckline, right? And then you can estimate your profit vis-a-vis your entry. But now in the King's Crown, the beautiful thing about the King's Crown is that you can join the market from the first wave. That's the most beautiful thing, from the first wave. So if we just backtrack a little bit, we talked about the market that is making, making lower lows. That is, the market is in a downtrend. And then for us to have the bullish King Crown, that's for the market to switch to bullish, the market will have to break the trend line, right? So when the market is trending to the downside, it will stay below the trend line. You agree with me? To stay below the trend line. But when the market is trending to the upside, it stays above the trend line. So in this scenario, the market is actually below the trend line right now. So how does the market move? The market moves in waves A, B, C, D. One full price swing is completed, and then we switch to another price range A, B, C, D. So every time the market gets to D, the market tends to pull back towards the trend line. Now, not necessarily uh, um, um, compulsory that the market must hit the trend line, but the market could come up with a behavior that forms what we call inner trend line, outer trend line, long-term trend line. I mean, this is something we've explained in the past. So when the market does that, and give you a candlestick formation around the trend line area, it's an opportunity for you to join the market. So when the market is trending down, you can actually join the market from the first pullback, second pullback, third pullback, fourth pullback, until the market bend, right? So, but how do you know? How do you know this is going to happen? So this is it. So when the market continues to make lower lows, remember, these lower lows are ABCD price movement. Now the market gets to a point, okay, and then the market breaks the trend line. Now in the bullish King's Crown, this is step number one. The market breaks the trend line. Now that the market breaks the trend line, it doesn't mean that the market has changed direction. So that's where a lot of traders get it wrong. Okay. As soon as the market break the trend line, some trader will quickly rush into the trade and say, oh, the market has broken the trend line, the market is buying. And no, 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 no. Sometimes it breaks the trend line, and then, like I mentioned, I said the market can create a harder trend line, a long-term trend line, and an inner trend line. It could just be one of the opportunity for the market to, change the trend line location. So when the market creates what we call two candles to the left, two candles to the right, lower than center weak high, the market form what we call a resistance. Okay. And then anytime the market form a resistance, in as much as this resistance is higher than this previous resistance, the trend line can be readjusted. So we can readjust the trend line. Okay. But when the market breaks the trend line, if the market is actually going to change direction, it will not just stop by breaking the trend line. The market is going to do another step. and the market is going to take out the A, that is, it's going to close above the A, or it's going to break the A, not necessarily close above the, it's just going to break above it or close or pass through. You can still pull back and close below it, but then it will violate this level. Okay. So the market, step two, take out the A. Now, when the market takes out the A, now you have a very good indication that this market is going to change direction. And when the market does this, the next thing the market will do, like you all know, is that when the market breaks a trend line, the market attempt to go and test the trend line. So the market will attempt to come and test the trend line. Now, where the market is testing this trend line, the most important thing you want to look at is not just the testing the trend line. You want to look at the B, the last B, before the A. This position, this we'll call it left tip. Okay, so this is the left tip of the crown. So if you look at this now, this is a crown that is forming. This is the base, and then this is the left tip. This is the center tip. So we're just waiting for the right tip to form, and then we run. Okay, so usually 50 to 70% of the time, the left tip will form around the area where you have the right tip. So you are going to look for this B, okay? Look for B, okay? Once you locate B, you draw a horizontal line on B, and that is the most likely area where your C is going to come from. So when you draw this market, watch this market is going to pull back to around this area. Now, the beautiful thing is, if this is coming from the 61.8 level, it makes it very, very effective. And then your extension is going to be 161.8, right? So the market pulls back to, this is step number 4 now. 4, it pulls back to the trend line, which is going to coincide with this B. And that makes this the right tip. So this is your left tip, center tip, right tip. Next thing you want to do is a buy. So now, when you now get to this left right tip, and then you put a trend line here, and the market breaks that trend line with an aggressive candle, you have a buy in your hand. If you see a morning star candlestick here, you have a buy in your hand. If you see a piercing line candlestick here, you have a buy in your hand. Okay, so this is exactly what the market is doing. And once you get this, you are going to be, if you enter this market here at this candlestick that forms here, you are entering from the very first wave. If, unlike the head and shoulder, that you have to wait for the market to go and break the neckline, no, this one you are entering from the first wave, very first wave. Look at it. So another wave structure is going to commence. So now you're not going to have A, B, C, boom to D. Okay, you close your trade, you allow the market to pull back to the trend line, A, B, C. So step number 5 is, once the market has formed the C and you draw your trend line, you want to ensure that the market is on top of the trend line. So somebody can join the market here. This is the first wave. And a conservative person can say, no, I don't want to join here. Let me wait for the second wave, when the market will pull back, to around where this trend line is, gives you a candlestick formation, and boom, the market continues to buy, to buy. Okay. So this is the Kings, the MTI bullish Kings crown formation or structure. I hope this makes sense to somebody this morning. And now if we take this to our chart, so we can actually look at our chart and see this 5-step process. First, the market is making lower lows, that the market is in a downtrend, and the market, you identify A, B, C, and then the market comes and break the trend line. It didn't stop there. The market move and takes out the A, and once the market takes out the A, this becomes your A and this becomes your B, and then you wait for the market to pull back to around where you have the B. Okay, so you look for B, you wash out, draw a line from B to to the extend it to the right, and expect a candlestick in that area. The market comes to that area. If you are very, very aggressive, you might just put a trade there. You may not necessarily need to wait for the candlestick pattern. And then you mark your entry, you mark your exit, you mark your stop loss. Okay, and then the market gives you, boom, look at the massive bullish candlestick. So for someone who waits for this candlestick, the person is going to suffer to take the trade from here with a, reduced profit. But the aggressive person that, just said is going to turn around the bill area and takes the trade, the person will be in the trade from a better position and see takes all this profit. Okay, so that's exactly what you are seeing on this chart, just in case you don't know. So this is the CHF JPY, okay, and this is the monthly chart, this is the weekly chart. Now, from the weekly chart, ideally, I can see that the market has made an impulsive move, has taken out this low, which is like your A, and if you put your Fibonacci there, that was probably around 78.6, right? So that will give you your long-term take profit. But then let's come to this chart. Let's come to the daily chart. So on the daily chart, so what I usually would do, I would just apply one of my templates because I have template for all the time frames. So I just come to the daily template right here. Boom. I apply this template. Now, when I apply this template, you see every of this move, the upper one are resistance, the down is support. So this is support, resistance, support, resistance, support, resistance. So your trend line, you are drawing your trend line from support to support, resistance to resistance. So in this case of this chart, what I will do, I will draw my support to the last support before the last resistance right here. So right here, I say this is my support. And then the market breaks this support. Market breaks this resistance right here. Okay. Like we said, market breaks this resistance. After the market breaks this resistance, the market did not stop there. The market takes out the A. Okay, so this is the A. The market takes out the A. And as when the market takes out the A, what do you want to do? You want to come and look at the B, which is this place. So in this scenario, you can see that it actually breaks above it. Okay, I'm going to explain it better for you. Okay, so it breaks above it. Now, this is one of the pattern, that it happens. Okay, so this is your left tip, center tip. We are waiting for the right tip. Now I'm being aggressive, so I've already entered the trade. So I pull the trigger right here. So this is joining the trade on the first wave. Now, when I draw my downtrend line from here, so this resistance to this resistance, this becomes my downtrend line. The first move this market will make is going to drop from this point, okay, right here. So this is my A, this is my B, and then this is my C. And my C is coming from 78.6. So I'll expect take profit around 128.7. Okay, somewhere. So when the market gets to this level, naturally the market will pull back and start gravitating towards this trend line. When the market gets close to this trend line, I want to look for a candlestick formation and enter another position. So by the time the market gets to this take profit, market will close, I'm out of the market with profit, and then I'm waiting for the next opportunity. Some people may decide not to put this take profit, right? The market will get here, it will still pull back, and when it gives them the next opportunity, they put additional trade, just like the case of this buy, that came up. It came here, it buy, it came here, it buy, it came here, it buy. So every of this support is a trade for this person, that ride this trend all the way to the top. Okay. All right, so that's just so that you don't feel that, oh, I post the chart and you don't understand what the chart is. So this is just a quick explanation for you to understand, the charts that are posted. Okay. I hope this makes sense to somebody in the house. All right. So thank you very much. If anybody have any question, you can you can post it on the group for others to benefit from the answer that I will provide for your question. Thank you and God bless you all. So we